Yeah, so a couple things that we need to take note of for Bitcoin on our daily time frame. Um, First of all, let's still acknowledge the fact that the true analysis, when we're looking at this, the bigger picture, it's still, we're in a range, right? We're in this 30K is our range lows and 41K is range highs. Every time 30K gets tapped, we expect to see mid range and then range highs. Every time range highs get tapped, we expect mid range and then range lows. That is the range. That was the analysis on the day of May 19th, when this crazy liquidation cascade candle happened. That was the analysis that was made. It was, hey, guys, we've probably found home for a bit, right? This is probably our new home. We're probably not breaking out of this anytime soon. And now, fast forward 2 months later, and the exact same analysis is still holding true, right? So when you really break it down, that is the first layer. That is the first argument that you're going to make. It is just simply, we are in a range until we're no longer in a range, right? It's either going to break down or it's going to break up. So that is the analysis. Layer two, the within the price action of the range, the actual price action that's occurring on the daily, this is without a doubt, there is no argument, there is no interpretation, there is no, oh, wait, but I see this. We are downtrending. These are all lower highs and lower lows, right? That is a downtrend. We said this as soon as this low got created, that was the confirmation. We talked about each and every single one of these highs. Previously, we were in an uptrend. We said if our daily no longer wants to be in an uptrend, then the 4-hour 200s here at 36.7-ish K are probably going to hold true, right? And hold as resistance and potentially break our structure bearishly. So we saw that. We got at least the higher high stopped at those 4-hour 200s, right? So from that higher high, we still got a higher low. We're still in our bullish market structure at that point. This is all fully within the terms of the uptrend. From that higher low, we then get a lower high, and we talked about this lower high as well. We said if we're going to put in a lower high, it's probably going to be at the 4-hour 200s once again. And so we got the lower high, and then from that lower high, we said, all right, we either break down and form a lower low, and now we're downtrending, or we either find a higher low on the daily, and now we're going to form a consolidation structure, right? So then we form a lower low. Now we're downtrending. So what do we expect? We expect lower highs and lower lows, right? So then we get a lower high, and then today's daily candle was a lower low. Actually, yesterday's daily candle, right? So it's not rocket science. The daily is downtrending. There is no argument against that. The daily is telling you, hey, we are trending downwards. So there's a good chance that we're going to see these range lows at 30K tested once again, right? That has been the analysis. And for the entirety of the range, it has been, if we are uptrending above mid-range, then there's a pretty good chance that we're going to see range highs. If we're downtrending below mid-range, then there's a pretty good chance that we're going to see range lows, right? So our daily is telling us downtrend. Our daily is telling us we are at risk of seeing these range lows tested once again. And so going further with that analysis, kind of digging a little bit deeper into the context of things and what testing 30K means. If we test it for the sixth time, right? So this was 1, 2, 3, 4, 5. And then so if we come down again, that'll be number 6, right? If we test our range lows for the sixth time, it's going to exhaust the buyers that are willing to step in this region. It's either going to take away a lot of the conviction that they previously had from stepping in at this exact same level for the past 2 months, and all of a sudden we keep testing it and we keep testing it, and now they're no longer immediately seeing profit from buying in this region. Now we're lingering at break even or slight loss from where they bought in at, right? They're not used to that, so they're a little bit less convicted, right? They're not as convinced that price action's going to hold this range. Additionally, they might not even have the funds to keep supporting this range, right? To keep buying the range lows that they've been buying for the past months. Personally, I don't, right? I don't have any more funds to keep spot buying dips, at least not at 30K region, right? I'll spot buy, much lower, right? So I am exhausted personally. So if I'm exhausted, I can only imagine that other people are exhausted as well, right? So that is the analysis. So when you have buyer exhaustion from testing the range lows 6, 7, 8, 9 times, they're more likely to get exhausted and fall into like a complacency where all of a sudden, rather than um, just seeing this 30K region relatively get tapped, right? Not even a perfect tap, but you just come near this 30K region and buyers are willing and eager to step in, right? They are antsy to step in. They are ready to pull that trigger and market buy, or they have their limit bids sitting, waiting for price action, hopefully getting filled, right? And it is, hey, we come down to major support, back the fuck up, bears, right? Like you're getting carried away. You're getting ahead of yourself. Like this needs to calm down a bit. And then they push it back up to range highs, right? So that trend keeps recurring over and over and over again. Every single time that we see 30K, we see a massive bounce into mid range, and then we see continuation from mid range into our range highs, right? Whereas now we're seeing bounce mid range, bounce again mid range, slow downtrend. So now this time, maybe we bounce, maybe we only see mid range, maybe we don't even see mid range, right? They're less antsy to jump in. That is complacency. That is all of a sudden you are now, hey guys, we really need to step in, right? Like this needs to bounce right here, right now, or else we are potentially going to uh, cascade further downwards, right? And it starts to become, all right, you know what? Rather than eagerly jump in at 30K, I'm okay with price action trading at 30K. Right, like I've gotten used to it at this point. It's not too big of a deal. It's just 30K. We're gonna bounce eventually, and it's that complacency. It is that you just fall into being complacent and being okay with price action within this range, whereas previously it was either you got in or you didn't, right? You either got in intraday, you bought when it looked scariest, and you got heavily rewarded, or you didn't get in at all. Whereas now it will likely become, hey, anyone and everyone and their mother can all buy Bitcoin at 30K if they want to, right? So when everyone has the chance to buy at the exact same region for the past 2 months, for the sixth time and the third time in the past 3 weeks, it's probably not a good thing, right? So it probably is a sort of complacency. So that is the risk. That's where we're at right now. Our daily and our 4 hour are both telling us we are downtrending. We're likely to come down into 30K once again. Then if we dig in a little bit deeper than into that, it is the context of if we test 30K for the sixth time, what does that mean? So that's where we're at. And then above that, of course, we still have the analysis that the range is the range. So until it breaks, you're still ranging, right? So let's jump in a little bit further. So now we have our 4 hour time frame, and our 4 hour is also telling us down is the trend, right? Not only that, but our 4 hour 200s are consistently giving us local, if not macro tops, just like they were giving us macro bottoms for the entirety of the bull market, right? Since I want to say November of 2020, we won't zoom out, we show it every single time, but I want to say since like November of 2020, consistently macro bottoms all the way up into new all-time highs, all the way through into 64K. And then as soon as we break down below them, they start giving us macro tops or local tops, right? So the simple analysis is you're really not in the clear until you're above these 4 hour 200s, right? It's that simple. It really, really is. There's no reason to overcomplicate it. If your 4 hour 200s consistently acted as a macro bottom for the past year, And meanwhile, the analysis was bears are dumb, price discovery, and unless we break below the 4-hour 200s, then we don't know that bears are not dumb anymore, right? Now that we have broken below the 4-hour 200s and we're consistently using them as macro or local tops, the simple analysis is as long as you're still below the 4-hour 200s, there's a decent chance that you might use them as a local or a macro top. That's it, right? So simply, the bullish arguments start to pile in, and they pile in quickly once you're above these dynamic levels, right? Once you start to reclaim them and get them shifted neutral, if not bullish, rather than a downtrend, right? Rather than the strong momentum downtrend, once you start to get them sideways or uptrending and you're above them and now you're reclaiming them as support, there's a decent chance that you might start using them as local bottoms or macro bottoms, right? So the environment changes dramatically at that point. And a bunch of arguments pile on with that. You're breaking or you've already confirmed your 4-hour structure along the way into reclaiming those 4-hour 200s. You would also break your daily downtrend by reclaiming these 4-hour 200s, right? That'd be a higher high on your daily. So the bullish arguments very quickly pile on once that happens. I can't imagine that you would reclaim this major region only to continue the downtrend, right? Doesn't seem very likely to me. It would seem like the environment has heavily shifted in favor of bulls at that point, right? But until that happens, there's truly not too much to argue about why we won't see 30K tested once again. And if we see 30K continuously get tested for the sixth, seventh, eighth, and ninth time, then we already know what that could potentially mean. All right. So with all that said, the true trend as of the past, I want to say 2, maybe even 3 weeks, has been there is no trend, right? And our hourly kind of shows us this. So even though this is a valid downtrend, don't get me wrong, this is 100% a downtrend. There is no debate against that. Our hourly is kind of insisting that there is no real trend at this moment. And price action has been illogical since our hourly has been saying this, right? So our hourly 200s are kind of giving us this like mean and acting as like a home for price action to revert back to whichever direction that it tries to expand away from. And so, because of this, we're seeing less logical price action. And there's other reasonings behind this too. It's because the range has kind of dragged on for over 2 months. And now, instead of very acute pivot levels within the range, we're now just getting this jumbling of volume that was traded throughout the range, right? So rather than pivot level, pivot level, pivot level, right? Now we have just buyers or sellers are willing to step in anywhere in this region. So along with that, we also have the hourly 200 MAs mean reversion sort of idea. This analysis was made, I want to say somewhere back here. And so for about a week, 2 weeks now, it's been telling us sideways is the true trend and everything else is kind of lying to us. And for the most part, that's been relatively true. And it's been, we expect some sort of breakdown or breakout, especially when our higher time frames are telling us that, we just confirmed a downtrend on our 4-hour, right? So this is lower low. So you would think lower high and then continuation. And so rather than that, we instead get lower high, higher low, higher high, but then wait. So now we're above these hourly 200s. Now we have a bullish structure on the 4-hour. So you would think that we hold and continuation, right? And instead, we break down, and now we're breaking the structure. Now we have a 4-hour downtrend, so you would think that we continue downwards into 30K, and instead we might just sort of illogically expand upwards above these hourly 200s again, maybe form a bullish market structure, maybe break into some bullish arguments, only to do absolutely nothing and just continue going sideways relatively until anyone and everyone has completely lost their minds and they have absolutely no capital left to trade this market, or they're just not interested in trading this market anymore and they move on to forex or stocks or whatever, and then we move, and then we either see 30K or 37K or range highs or dramatic drawdown, new bear market, whatever, right? But that's what the hourly is kind of telling us. And that's what it's been telling us for the past 2 weeks. And for me, I jumped in and I heard, right, or I listened to the hourly somewhere in this region. So about a week or 2 weeks ago. All right. So that's how I'm looking at it just all across the board. Obviously, if this hourly 200 MA mean reversion idea sticks true, then it's just going to create even more pain for anyone who's looking to trade the trend, right? Anyone who's anticipating a downtrend to continue, or anyone who's looking for bullish signatures of the downtrend no longer being as prevalent as it is, are just going to get absolutely screwed over. And the simple reason for that is you tend to inflict this like self-caused pain whenever you assume a trend in something that has no trend, right? So our hourly 200s have been telling us prior to any of the higher time frame analysis, and regardless of whatever trend it was, it's always been telling us for the past 2 weeks or so the true trend is sideways, right? And the hourly was the first time frame to really tell us this. And eventually, our higher time frames fell into agreement with that, formed this like consolidation structure. So now we had confirmed sideways across all time frames. And now we have a downtrend, but our hourly is still telling us, hey, those higher time frames are lying to you. We're still going sideways. And there's not much more of an analysis to that, at least for the hourly time frame. So while our higher time frame structures are all undoubtedly bearish, this is the last remaining bullish slash neutral argument, right? It's not even a bullish argument. It's just the simple fact that it's something other than downtrend. And that is hopeful for anyone who is bullish. So it means absolutely nothing. It just means, hey, we might just continue going sideways for longer than you might expect. And if you've ever heard the quote, the market can remain irrational for longer than you can remain solvent, right? So you personally might be feeling like, hey, it's about time that this sideways starts breaking down. And the market doesn't give a shit about how you feel or your emotions and ability to remain solvent. It can continue going sideways for as long as it wants to, even if another 2 months within this range on top of the 2 months that we've already been in this range, right? So keep your sanity is my sort of feeling. This is how I'm approaching the market. I'm making sure that I keep my sanity and that I am ready and able to jump in on the next move, no matter what the outcome is. It whether we continue going sideways for another 2 days, 2 weeks, 2 months, or whether we break down and see 30K tomorrow, or whether we break up and invalidate a lot of these bearish arguments and start seeing our path into our 4-hour 200s again and into 37K and into our range highs again. I'm making sure that I am mentally sane and I have the capital to take advantage of whatever happens next, no matter the outcome, right? So that is sort of where I want you guys to be. I want to make sure that you guys are also staying mentally sane, because truly, unless you're zoomed in to something like a 5 or a 15 minute, then there's not much here for you to look at, right? We just discussed our hourly, the intraday time frame, is kind of just illogically moving sideways rather than forming some sort of trend that can be tradable on anything higher than an hourly time frame. So unless you're zoomed in 5 minute, 15 minute, and you're just trying to uh, get in, get out, take your profit for the day and walk away, then there's really not too much here for you. So there's not much of a reason for you to be wasting mental capital on this sort of price action. All right. So that's Bitcoin. And unless anyone has any questions or any comments on anything, then we're going to go ahead and move on into Eth USD and the rest of my rambling. All right. Don't think anyone has anything. Let's go ahead and move on to Eth USD. All right. So Eth USD is starting to look really scary. The way that I'm looking at this, we just broke our daily structure bearishly. You could even argue that we confirmed it. Depending on how you want to interpret this, as always, market structure is up to interpretation. Of course, there are some things that are just so obvious that you really can't debate it. There's not really multiple ways to see certain things. Like these are all higher highs and higher lows. I don't think anyone's really going to debate that. You could argue that this is a higher low and then lower high and then lower low. So now we're downtrending. Or you could just say that this is all one lower low and this is a break in the structure. Either way, it's both bearish signatures, if not a bearish confirmation. I'm personally going to say that this is all one lower low, right? And so this break in structure saw us below our 1980 sort of demand zone, and we're actually still technically holding it as of right now, and below our 200 daily moving averages. So for me, this is definitely not a sign of strength. This is not a bullish argument whatsoever, right? We very well could move back up sort of illogically and reclaim this region. And all of a sudden, this looks good for a bounce and potentially just a lower high, or maybe just a higher high and continuation of what was previously an uptrend. But really, I'm not expecting that. If it happens, I'll adjust. But truly, this looks pretty bad to me. I don't think closing candles below major regions is anything to get overly excited about, right? If anything, I think it falls more into that sort of complacency idea of now we're going to continue breaking away at this region and we'll expand downwards into some lower levels that we're already comfortable with, right? So that's how I'm looking at this. So personally, downside risk is imminent for me, or at least I'm wary of the downside risk potentially into 1740 once again, and that's nothing too crazy. That's a level that we've seen tapped multiple times here in the past couple months. So seeing it again, really not too crazy to think about. All right, that's about it for the daily. We can go on and do this fixed range volume profile, and I'm actually gonna change the settings on this a little bit. So I like to do row size 100, and then I'll just do 500 for this. Oh wait, hold on. I think I got those mixed up. So I want to do row size 500 and this 100. Okay. So we kind of discussed this idea as well. It's probably even more prevalent for Eth USD than it is for Bitcoin. But we discussed when you have this range that you've kind of dragged on for over 2 months, you stop getting so much of like pivot levels and you start getting just clusters of volume, right? So I would say that there's just this huge cluster of volume anywhere between 2100 and 2750 ish, right? We'll just say 2800. So anywhere in that region is potentially where sellers or buyers could step in. That's not the area that you want to be trading, right? You want to sort of position yourself on deviations away from the area. And if we enter back in it, then you want to look for it to act as supply or support, right? So that's how I've kind of been looking at this, and we discussed this when ETH was looking extremely bullish, had this beautiful uptrending structure, even managed to close some candles above the 4-hour 200s, and we were here saying, hey, don't disregard the fact that there's supply and heavy supply all throughout this region, and we could sort of just find this resistance all of a sudden and cascade downwards, right? And potentially out of this heavy volume area and into less volume weighted regions and continue this sort of trend downwards. So that was always a risk. It is still a risk. And now it's even more prevalent because you're below the point of control, the largest volume spike within this trading region. Right, and you could even argue and say that there's a daily demand zone here as well. It gets pretty nicely respected, right? So consistent resistance here, and then used as support, and then support again, support, 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 right? So pretty solid line of supply or demand. And so the fact that we're below this general region is definitely not something to be excited about. All right, so that's how I'm kind of looking at ETH USD as far as the daily time frame. As for our 4-hour time frame, it really should come as no surprise here. The 4-hour 200s are even more notable for ETH USD than Bitcoin. I know I sound like a broken record at this point. I'm pretty sure that most of the people watching this stream right now are people that consistently watch the stream, so we'll move on. But the 4-hour 200s held up. They managed to give us a local top, and this is what I'm sort of talking about, is as long as you're below the 4-hour 200s, there's always going to be that risk that they hold up, and then that sort of test of resistance ends up being something much bigger, and you break whatever trend or structure or levels that you used in order to come up and test this region in the first place. That's why it's called a bearish retest, right? It's not bullish if you come up into the 4-hour 200s as resistance. It's still, they have a chance to act as major resistance. They have a chance to cascade and break a lot of the trend and structure that you formed on the way up into them. So that's exactly what we saw happen. And because of that, because of these 4-hour candles and these 4-hour candles, I was hesitant to say this is the bullish retest and breakout that we're looking for before the much bigger up move. And that analysis held up pretty well as well. Just being hesitant and not being eager to flip bullish on something that gives you macro bottoms and macro tops for months, right? Generally speaking, if we see price action above these 4-hour 200s using them as support, then that trend tends to remain the trend, and it remained the trend for all of, let's say, okay, so October 2020 is when we reclaimed them, and then February of 2021. So 4 months, these 4-hour 200s remained the trend. Right, we break down from them, and so for about 2 or 3 weeks they acted as the trend once again, but this time as resistance. We reclaimed them, they act as the trend once again for about 2 or 3 weeks, and then this was probably the only deviation to that idea. But then reclaiming them as support once again, we see them trend for what was this one was 2 months, right? So doesn't really make sense to be eager to flip bullish or bearish on a tiny little bit of price action, right? For something that tends to create the trend for weeks, if not months. So that was the thinking when we were at this price action. And when you combine that with the simple fact that we know that there's heavy supply anywhere in this region, it's not really looking too pretty, right? It starts to look very pretty when you reclaim this region. You've used it as support. Now you've very convincingly reclaimed it. These are now trending upwards, and you manage to break above this sort of like midway point within your heavy supply zone. And now it seems very likely that you're going to consolidate towards the top side of the supply zone, if not break out above it entirely into this next supply zone at 3,200. right? And then from there, I really honestly wouldn't even think that it would stop. I think it would eventually continue the trend up into the next supply zone and the next supply zone and the next supply zone. And all of a sudden, we're in new all-time highs, and that's it, right? And now bears are dumb at that point. So until all of that happens, there's really not too much to get overly excited about for ETH USD. Until then, this looks more like bulls are desperately trying to hold on and potentially form a sideways trend, right? Because they haven't really managed to do so for a substantial amount of time. They saw consolidation, but eventually that consolidation broke down, and it broke down very quickly, right? It didn't even give us a long, dragged on sort of consolidation like Bitcoin is right now. It was, we formed consolidation, we broke it immediately, and then heavily expanded away. We formed a little bit of uptrend. It was only a bearish retest, and now we're downtrending again, right? So we're probably going to continue downtrending until structures break, trends get reclaimed, levels get reclaimed, and now we're going to consolidate against our 4-hour 200s, sort of like Bitcoin is, and we'll start getting that like sideways, illogical, mean reversion price action, whatever. And from there, we can form bullish theories as to why we might move on from a downtrending structure into a neutral, into a bullish, right? And we'll just sort of chop and illogically move. Everyone's looking for the breakout or the breakdown, and instead we're just going to go sideways. We're going to start flipping this structure, this trend, this environment, and then eventually we can see the bullish argument for why this might continue on and upwards for weeks, if not months, right? But until all of that happens, and it's not very likely to happen just in one day or 3 days, or maybe even it's going to take longer than a week, it's really not too worth talking about, right? It's not a realistic probability. Everything on this chart is saying downtrend, and the exact same trend that we've been using as macro bottoms and macro tops for the past year and a half remained a macro top, right? So, really, what's there to get too excited about for ETH USD until all of those arguments start to get faded away? All right. From that, we'll transition into ETH BTC. And ETH BTC, not looking too pretty either. Daily analysis, again, I'm pretty sure you guys watch the streams. It's probably the same viewers that always watch these streams. So the main analysis for ETH BTC is just we test this weekly demand zone, sorry, and we bounce from it. And so we may have broken some daily structures, we may not have, depending on how you interpret price action, right? Depending on how you look at it. But the simple analysis is we tested weekly demand and we saw a bounce, and that's about it. So from that bounce, if you bought, if you were that sort of person, spot allocating at strong major demand zones where it makes sense to be a buyer, weekly demand, daily demand mixed with 200 daily moving averages, daily demand, weekly demand, then you were the person that got rewarded because you bought weakness, but you bought weakness into major support. And if that weakness were to get sort of diminished or completely reverted, then those are the regions where it makes sense for it to do so. So you took the risk, you allocated when things looked the worst, but you took a sort of higher probable risk sort of bet because you took it at major support, at regions where it would make sense for other buyers to step in as well. And you got rewarded, and now your reward is sort of diminishing. Sorry, excuse me. Your reward is sort of diminishing. You could argue that this was a break in our structure, right? Depending on if you see this as a higher low or not. And if you do, then now we have a lower low and break in the uptrend on our daily. So bearish argument, right? So now we zoom in, and I think zooming in is really the proper thing to do, unless you're going to zoom out and look at only the weekly. Then I think zooming in is probably the way to go right now. On our 4-hour chart, We also discussed the 4-hour 200s. We discussed our 4-hour market structure for ETH BTC as well. And so about this point, we said we have a valid uptrend. Well, really, the uptrend formed prior to that. These are all higher highs and higher lows. So we said we're going to look for a higher low. We're going to look for a continuation, another leg upwards of this trend into this 0.07 supply zone. All right, that's 4-hour supply. It consistently acted as support and resistance multiple times. So that's what the analysis was. It was, we've reclaimed regions. We're going to look for a move up into this general supply zone. We didn't quite get there, but it was pretty close, about 1% away. And then from that test, and I say that hesitantly because it was 1% away, but from that test, we got a breakdown in the structure, and we lost the 4-hour 200s, and we lost the 4-hour demand zone that was confluent with those 4-hour 200s. So not only did you reject off of this region and lose your 4-hour 200s, but now you have a confirmed downtrend. You now have lower low, lower high, and lower low, right? So what are we expecting next? Probably a lower high, anywhere in between this high at 0.063 and current price. So the logical place to do that at would be on a bearish retest of this general region, and from there, you would just kind of anticipate that the trend remains the trend all the way down until you finally get to this weekly demand zone once again. If you reclaim this region, then you'll also break your downtrending structure bullishly. And now you have bullish arguments as to why this might reverse and as to why this might see a proper test up into this 0.07 supply zone again, right? Just as you formed that analysis here. Except this time, it'd be kind of cleaner because you would have confluence in levels, so you could probably hide a tighter stop loss and get a pretty nice RR long setup from that trade, right? But until that happens, it's not the probable outcome. It is not the realistic thing to expect. It makes more sense and it's more probable to expect the downtrend to continue, whether we get that lower high right here on this 4-hour candle or whether it's up into this region. It's more likely that we're going to see lower high and then continuation of what's already a downtrend. So ETH BTC really not looking too pretty right now, and that's not going to change unless we reclaim this general region at like 0.063-ish, right? That's my thing. So zoom in a little bit further. Maybe there's something for us to acknowledge, maybe not. Hourly 200s kind of only add to our idea as confluence. So we really don't have to worry about them too much. There's really truly not much here stopping us from heading down into this weekly demand zone. We don't have to worry about lower time frame supports. All we have is our hourly 200s are also lined up as resistance within this general region as well. So now we have confluence on top of confluence on top of confluence on top of market structure confluence, right? It's just a block of region that makes sense to act as resistance. It doesn't mean that price action has to come up into this region and that's where we have to find our rejection. All it means is we're not in the clear until we've cleared this region. And that's it, right? So even seeing a move up into this general region still perfectly within the terms of the downtrend. So you're not really in the clear until you pass above and reclaim that general region. Even though our hourly 200s are acting as confluence, as resistance right here, right now, they will also be confluence in support if we do manage to reclaim that region, right? So immediately, once you start reclaiming this general region, now you'll have, rather than bearish arguments, now you have flipped into confluence in bullish arguments. So it would only add to the conviction that we're going to see another move higher, right, into this 0.07 region, and you can look to trade that, and you can trade that comfortably and be convinced on your setup because of all the confluence that you have, right? A lot of things need to go wrong in order for that to happen. And just like that, you could also take Obviously, you can't really short ETH BTC, but if you could, and this would probably be the way to do it, and you would short this general region. If we come up into it, you have a ton of confluence, a ton of regions that need to break. We also need to break that 4-hour structure in order to come up into your stop loss. So a lot of things need to go wrong, and at that point you would think that we strongly reverse upwards anyways, right? So you probably don't want to be in that trade. So it doesn't really make uh, too much sense because you can't really short ETH BTC, but if you could, then that'd be the way to do it. But then if you get stopped out on that short, then you immediately have that long setup with the exact same arguments, just towards the upside now. All right. Take a quick break. Let me see if anyone has any questions or anything. Nope, doesn't look like it. All right. And then we'll go ahead and move on into dominance. Take a sip of water really quick because you guys know I love rambling about dominance. All right. Try and make this quick. But dominance on our daily chart still scares me. There's really not too much to take note of here. All that I'm saying is that dominance has pretty significant room to run, and it really wouldn't even mean much in the bigger context of things. If you're looking at the bigger picture, dominance has been in downtrend for the past 2 years or so. So really, we could see a significant move upwards, maybe into this 49.65 region, maybe into 52, maybe into our 200 dailies, maybe all the way up here at 58, 60, 62. Who knows, right? But we have significant room to run upwards, and it really would not even mean much. It would still just be within the trend of the 2 year long downtrend that we've been seeing historically for dominance. So that's the caution reason, right? That's the reason that I'm being cautious, the reason that I'm wary of exposing myself too heavily to altcoins. And then the trigger for this caution are the 4-hour 200s. So the 4-hour 200s consistently act as macro bottoms, macro tops for dominance. They get very nicely respected, and that's about it. And so if we're above these 4-hour 200s, then I really don't have a reason to justify being heavily exposed to altcoins. The simple analysis is as long as we're above these 4-hour 200s, then we might use them as a local or a macro bottom for dominance, and we might see the uptrend continue. And that's it, right? So it's not so much just that, oh, we're above the 4-hour 200s, or oh, we're below the 4-hour 200s. It is more so we are trending above the 4-hour 200s, or we are trending below the 4-hour 200s, and they are heavily sloped towards that direction as well, and in agreement with this price action. And that creates momentum and trends. And as we know, crypto is a very trendy market. When you formed a downtrend here in the beginning of January or middle of January, that downtrend really did not stop until the beginning of June. So that's 6 months where dominance was in a strong downtrend. That is a bull market, right? 6 months of just constant upwards and new all-time highs, and money being printed, and greed and euphoria. All of that lasted for 6 months just off of this one break. And then we see our 4-hour 200s act as macro tops consistently, right? So until we flip that argument back bearishly again, until these slope back downwards, because price action has broken below and trended below, and now we're breaking regions. We have the downtrending momentum. We've lost our higher time frame sort of caution reason, right? Be cautious of daily reverting upwards. That's no longer a probable outcome, and all of our lower time frames are screaming bearish, bearish, bearish. Then we can stop being so cautious on altcoins. then it'll make sense for me to want to be exposed. But until then, as long as we still look like this, and what I mean by that is you really don't even need the price action itself, right? What is the trend here? Very clearly and obviously a downtrend. So, what's the probability that within this downtrend, we just sort of illogically move upwards and have this crazy reversion upwards, and everyone who's exposed to altcoins just gets absolutely fucked? It's probably not very likely, right? If we're sideways, what does that imply? That kind of implies that there is no favor, there is no trend, there is no momentum. So, the probability, I would assume, of being exposed to altcoins and getting screwed is, I would look at it as 50-50. Obviously, nothing's ever 50-50 unless you're flipping a coin. But that's how I would look at this. I would say there's a 50% chance that if I'm exposed to altcoins, I'm probably going to look like a genius. But if I expose myself to altcoins here, there's probably a 50% chance that I might feel and look like an idiot as well. Right. And from that 50%, we get uptrend. So now we have uptrend. What's the probability that we just strongly revert downwards forever and ever? And anyone who was not exposed to altcoins now feels like an idiot because they missed out. It's probably not very likely, right? So then we get sideways again. I say 50-50. From 50-50, we get up. And then from up, we immediately heavily go down. And then that down just kind of continues to be down for 6 months. This is not down, right? 6 months we've gotten down. Down only for dominance. This is something other than down. That scares me. That's it. That is the analysis. 6 years of trading price action and 4 years of trading crypto. And this is the analysis that I've come with. This simple analysis. Hey, if we're trending up, there's probably a good chance that we're going to keep trending up. And then, hey, if we're trending down, there's probably a good chance that we're going to keep trending down. This was the mentality that had me bullish on altcoins and bearish on dominance for all of this price action, right? I was screaming. You guys got annoyed by it. Screaming. Bears are dumb. Bears are dumb. Price discovery. Bears are dumb. Higher highs, higher lows. Bears are dumb, right? Bears are no longer dumb. That's it. That's the analysis. Can't really give you much more than that. If it changes, it changes. And then we adjust. But until then, there's always going to be the risk of being too exposed to altcoins and potentially getting very heavily fucked. And that's it. I don't want to get fucked by the market. That's the analysis. I can't really give you much more than that. All right. So that's probably going to continue being the analysis. I know you guys, let's see. Yeah, this is about all the same people that consistently watch the live streams, especially as of recent with how boring the market is. So I know you guys have already heard this before and you've probably gotten used to it by now, but it really doesn't hurt to kind of just bash this into your brain. It was the exact same thing for the flip side, right? When we were consistently trending downwards, I was bashing it into your brain. How do you know that this time's different? And it never was for the entirety of 6 months. It was never different. This time is different, right? This time is physically on the chart different. So if it pays off, it's going to pay off pretty well. And if it doesn't pay off, then we adjust and we assume that we can hop in and ride the wave anyways, and it's not going to mean too much, right? Because trends in crypto tends to last weeks, if not months, if not bull markets, bear markets, things like that. All right. So that's my rambling. So you guys can go ahead and send in a request that you want to see. Hawkeye right off the bat wants to see OGN USD, and I believe it was Engine USD. Yeah. All right. So OGN USD. Does this have more price action? Yeah. All right. So I need to draw some levels on this chart. I'm going to go ahead and delete these and let's draw some boxes. Gray box there, that's daily demand. Gray box right here, daily demand. And let's say, actually, let's just do it like this, daily demand. All right, so level, level, level. We had a huge range for about, what is this? A year. Yeah, massive range for about a year. We expand above it very heavily. That is that bull market-esque sort of vibe. And here we are back testing this year-long range. This is scary if you lose this zone. If you break down back into this range, then all of this was a deviation, and it implies range lows again. It implies 11 cents from 50 cents. So that's very scary. Current price, obviously 82 cents. So you probably don't want to be holding on to this for that to even happen anyways. But just saying, this has potential to be like catastrophic. So current price action, more relevant price action. This is sort of an uptrend, really, really odd daily structure. You could even honestly argue that this is still downtrending on our daily, and that this move is kind of all just one lower high. So to avoid confusion, I'm just not going to make a market structure analysis on this anyways. We can zoom into to lower time frames and justify it anyways. So there's really not too much of a point in confusing ourselves in the higher time frames, because you can really argue this just so many ways. Higher highs and higher lows, and look at that, we're bullish on the daily, or these are all lower highs and lower lows, and this is all still just one lower high, and we're still bearish on the daily. So different ways that you can look at it. So let's just avoid that. As for price action, let me see if there's any relevant levels that we need to be watching out for. Not seeing too much of anything on the daily, but I think if we zoom in, we can kind of justify some levels on our 4-hour. So yeah, so 4-hour level, I'm going to say that there's a 4-hour level here, just roughly in that region. And I'll also say that there's a 4-hour level here. So now we have, this looks pretty solid on the 4-hour chart. I can't really acknowledge those 200 daily moving averages. Don't have a ton of price action to work with. How well do they get respected? I don't really know. But the 4-hour 200s, very, very nicely respected. So to me, this looks really solid. Higher highs, higher lows. This is lower high, higher low. So you had consolidation, but this move upwards gives you higher high, break out of the consolidation. Now you're uptrending, right? High, low, higher high after forming higher low. So uptrending structure, uptrending momentum, and you're cracking above these 4-hour 200s. You've also cracked above this 4-hour supply zone. So this looks really good for me to say that this has potential to come up into this 90-cent region, and then from 90 cents getting reclaimed as well, I think this expands much, much harder. How hard? Let's see. I would say next supply zone somewhere around here. Let's draw it like that. So $1.12. So little late now, obviously, because we're about halfway there into our next supply zone. But from that next supply zone into the next supply zone after that is a 20% move. And then from there, if you continue that trend, I would say another 4-hour supply. We can even draw it all the way back here, really. Next 4-hour supply at $1.35. So you have 20% move, 20% move. So tons of potential for upside on this chart. Wait, I mean to delete that. Boom. Yeah, tons of potential for upside. I would think at the very least you do see this 90-cent region tapped, and from there I would look for long entry within this region on like a retest or the breakout retest of that region into the next zone. So this looks really solid. So good eye, Hawkeye, right? I think that is your name in Discord. Rightfully so. Really good eye to be paying attention to the stuff that is showing strength. That's really important. You want to trade the trend. You want to trade the momentum. You want to trade if you're looking for long entries, which naturally I would say probably 80% of people are optimists. Truly, when it comes to the market, at least. So most people are going to be more willing and eager to look for long entries, and that's true for me personally. That's just naturally your genetics, how you were grown up. Personally, I'm more of a natural bull than I am a bear. So you have to acknowledge that, and you have to be willing to admit that that is your natural bias, and that is so. If you are looking for long setups in a market that is mostly sideways or downtrending, then you want to look for stuff that looks like this. So really good eye. Right, so that's the setup that I would kind of work with, and then it would just be really simple. Take profit here, take profit here. You can extend it as much as you want. You can, pray and hope that the trend just continues to be the trend, and you can just continue expanding your take profits, or you could even compound it. Right, so like compounding on a reclaim of this region and into the next region. Right? And then you compound, or let's say you never get this entry, and now this is just your setup. So now you trade this one, and that's your setup. Or maybe you expand this one into the next as well, and then now you have two take profits. So many ways to play this, but really, really good looking chart for anyone who wants long setups. Hourly, we can zoom in and see if there's any confluence on the hourly. Really nothing too crazy. I don't think the hourly 200s get respected all too well. I really wouldn't form any sort of like bullish setup or theory around them. But by all means, they might be confluent with the higher time frame analysis. So, that is an additional argument that you might have if you see that happen. Probably not, because they'll probably be sort of caught up and choppy throughout the price action. But there's potential, right? Really, they're not too notable anyways, especially or at least not as of recent. Prior to this, they were very solid. For all of this price action, they were really solid. But recent price action, really just choppy. All right, so that's OGN USD. The other one you wanted was Engine USD. Let's go Engine USDT, probably a little bit more price action. Okay, got to bring some stuff to the front so we can see it. Why is this? Hold on. I'm really particular about how things need to be ordered. Why is it doing that? It's so weird. Visual order, send backward. There we go. No, it still didn't do it. Whatever. I'll just deal with it. Sorry, I'm really OCD about stuff. But Engine USD, also another sort of weird market structure, weird looking like leg upwards. So many different ways that you could debate this one as well. So for that reason, probably kind of similar price action to OGN, but stuck under the 200 dailies, and we can acknowledge them. They do get pretty nicely respected historically, so stuck below them, using them as resistance and also using a daily supply zone as confluence to that idea. So without even any real like effort, I can just say, hey, if we're above this general region, that's probably the breakout, and that's probably going to see another 24% or so move upwards into our next daily supply zone, right? Which we've consistently used as macro support and macro resistance. So that's the next level to watch. And then, of course, reclaiming that one probably sees another expansion into the next supply zone, so that would be another like 22% or so, and then reclaiming that would be all-time high supply zone, and that's another 30% or so move, and you break above that, and all of a sudden bears are dumb again, and this is now looking extremely strong at that point. Right, so then we zoom in to our lower time frame. Again, not going to really make too much of a market structure analysis on the daily, but our 4-hour 200s are notable, definitely. Consistent macro bottoms during the bull market, and now here acting as macro tops, right? So had you asked me for my analysis on engine throughout the bull market, I would have told you bears are dumb, all-time highs, bears are dumb, and unless we crack below the 4-hour 200s, I can't honestly say and sleep well at night that bears are not dumb, right? I can't say that and fully convince myself that that is true. So finally, we break below these 4-hour 200s, and a little bit choppy here, not as clean as something like ETH or Bitcoin or anything like that, but we do start to use these 4-hour 200s as macro tops. So that should be the warning sign that, this time is much different than any of these other times. And then from that, the trend remains the trend for the next couple months or so, and we see them act as macro tops consistently for those next couple months, right? And so now the context of this price action is significantly different than what we've gotten accustomed to for the past 3 or 2 months or so, right? That is the analysis. It is our 4-hour is actually, it's technically downtrending, I want to say, but this looks more like consolidation than anything, right? This is technically a lower low after creating a lower high, but it's just barely, it's still holding on to that demand zone, right? That 4-hour demand zone. And for the most part, the momentum has died off. So we're now going sideways. And when I'm saying that, I'm not looking at the price action. When I'm saying that, I'm looking at these moving averages the same way that we use them as an indicator for the trend for all of this move upwards. And like, this is extremely exaggerated, right? This is absolutely bonkers. You can't expect this any and every single time that we get a trend. But once that happened, this was the change to the dramatic, over exaggerated price action and trend that we were accustomed to. We went sideways, right? So now 50-50, right? There's a 50-50 chance that you go up, or there's a 50-50 chance that you go down, is now much different than there's a very slim chance that you just see price action do one of these, right? My arm sort of jittered there. That's why that weird line. But you get the point, right? So that is a dramatic shift in the trend. So when I'm saying that this looks more like consolidation, I'm not talking about the price action. I'm talking about the fact that price is chopping throughout these moving averages and for the most part consolidating, and the momentum is no longer strongly bearish as it was for the past 2 or 3 months or so. It's now sideways. It's now neutral. So your probability of getting long and being right has now skyrocketed, even though we're not even bullish yet. We're not even trending upwards, but just the jump from, like, okay, let's say the probability of price action strongly reversing towards the upside, let's just, for the sake of argument, let's just say it's 25%. There's a 25% chance that price action strongly reverts in the middle of a strong downtrending momentum, right? There's a 25% chance of that happening. So from 25%, now you're 50-50. Now your probabilities have skyrocketed dramatically, and you're not even bullish yet. That's the point that I'm trying to get across, right? So this price action, to me, is a much different context than what we've been seeing for the past 2 or 3 months or so. This is enough to convince me to want to be bullish on Engine and think that I have a pretty decent chance of being right. So if I'm looking for long setups, I'm willing to take any sort of long inside this price action. So anywhere in this range, really, I'm willing to go long, and I'll just adjust my position size accordingly. Obviously, I want to get long towards the lower side of this region, so a test, one of these lows would have been ideal. Maybe even reclaiming the 4-hour 200s, ideal, right? And I can hide my stop loss. That's a pretty loose stop loss, 15%, but I'll adjust my position size, and I have a pretty solid chance of seeing this next move. Obviously, once the bullishness really starts to take priority, then we don't need this like more speculative setup. We can actually jump in and trade the trend comfortably, right? Once we crack above this 4-hour supply zone, really it's a daily supply zone. Once we crack above that supply zone, then we can look for that breakout retest. We can now hide our stop losses below the 4-hour 200s and below the uptrending market structure at that point, and look to jump in on the continuation of the trend. Take profit, right? So Engine and Origin USD, I believe, both really, really solid assets to be keeping an eye on, or maybe even positioning yourself into if you're biased long and looking for long setups. All right, obviously dominance, pretty scary still, and that hasn't changed. But these both look promising, and so strength is strength. And I'm never overly biased just because I'm thinking something on dominance. If I see a good setup, and a good setup is one of these, if I see that, then I'm more than willing to jump in and go long in this altcoin, right, or on Origin or whatever it may be. There's absolutely no I have to be right sort of feeling. It's either I'm right or I'm gladly wrong, right? I'm more than willing to change my bias and jump in on something that looks promising if price action can show me any sort of promise, right? Or any sort of hope or bullish arguments, whatever it may be. All right, so really, really good eye, Hawkeye. Nice requests here. Starting off strong. Anything else that you guys want to see? We've rambled for about hour and 10 minutes so far. Peak bull market. Some of these streams are going for like 3 hours, which I don't mind. It's kind of just if you guys want something, then I'm here. If not, then I'll see you next stream or in on-demand TA. All right. No questions, no requests, nothing like that. So I'm going to go ahead and get out of here then. As always, love you guys. Appreciate you coming and watch the stream. Thank you so much. Really means a lot, especially when the market is super boring as it is now. Mainly the majors, Bitcoin, Ethereum, stuff like that. So super boring market. And so now is the time, and I've kind of just been trying to bash this idea into your heads. As soon as the range started, it was, hey guys, I'm going to find new hobbies, right? I'm going to start giving my girlfriend more attention. I'm going to start riding my bike more. I'm going to start a new workout routine. I'm going to start you know, drawing or whatever it may be, reading more books, whatever that sort of thing is, hanging out with new friends more, spending more time with your family, whatever it was that you didn't have time to do during the bull market because it required your attention. Otherwise, the opportunity cost of not paying attention to the bull market was super, super high, right? The opportunity cost is rather than spending your focus on the bull market, you're spending it on reading books or riding bikes or whatever, that sort of stuff, spending more time with my girlfriend. The opportunity cost is you miss out on a bull market, right? When the market is boring like this, and we said this analysis, you can go back and watch the stream on May 19th. We said this is likely to go sideways until it drags on and it just drains all the energy and brain power from everyone, and then we'll move, right? I can't imagine that we won't or that we'll escape this like new home of 30 to 41k sideways range anytime soon. So now is the time to pay less attention to Bitcoin, pay less attention to the market, and just kind of take a step back and focus on other things that you didn't have time to focus on for the past 6 months or a year or whatever, right? That was the time to do so. That is still true, right? And like I said, for the most part, Signal Profits has still been profitable since we made that analysis. We've had couple weeks where things are not either active or we have a couple stop losses hit, but for the most part everyone still should be just kind of passively making a little bit of profit, if not breaking even, maybe even very profitable depending on what trades you've been taking and whatnot. But still, that's going to remain true, right? You should just be able to kind of take a step back, not focus on the market so much, educate yourself, watch these live streams, pay attention to the market updates, pay attention to the fact that the market updates have not mentioned anything other than Bitcoin for quite some time now. Right? For me, it's kind of all eyes on Bitcoin. And once we make our move, then that's probably going to dictate what the market does for the next who knows how long. So it's kind of just all eyes on Bitcoin. Don't spend too much time on it. Don't want to sit down at the computer for an hour or two and look to day trade Bitcoin. You're probably going to drive yourself crazy. The opportunity cost is slim. You're not missing out on much. I promise you, you really are not missing much. That's the mentality that I've been taking. I've been reading books. Jacob actually just bought me a new book just because he felt like it. So, gonna read that. Been riding my bike more. Been doing other stuff, hanging out with my girlfriend more. She's enjoying that. Uh, I'm not enjoying that so much, but for the most part, that has been the thing. And I can't stress this enough. Make sure that you stay sane. Make sure that if we enter a bear market, you have the mental capacity to survive the bear market. You have the mental capacity to know when to jump in and when to step the fuck away. And if we resume the bull market, make sure you have the funds and the mental capacity to jump in and take advantage of the new opportunities given to you. This is not the time to be focusing on the market. It is the time to educate yourself, read more books about trading, touch up on your psychology, learn how to look for setups, what dictates what's probabilities, things like that. Jump into the live streams, do all that stuff. But it's not the time to sit down and focus all of your energy on trading the market and trying to scalp and scrape profit unhumbly. I don't know what the opposite of humble is, but from the market, greedily try and take profit from the market, right? Now is not the time to be doing that stuff. So I really cannot stress that enough. Make sure that no matter the outcome, whether it's up or down or sideways for the rest of forever, make sure that you still have your sanity and capital to take advantage of whatever happens next, no matter what happens next. All right. The last thing you want to do is exhaust yourself trading a sideways or boring or downtrending market. And when the opportunity does come, you either don't want to jump in or you can't jump in. That's my like ending quote of wisdom, whatever you want to call it. But as always, thank you guys so much. Really appreciate the fact that you guys still come into these live streams. I swear it's going to pay off, next bull market, whatever that is, whether it's tomorrow or 20 years from now, it's going to pay off, right? The guys that are in here, guys and girls that are in here watching these streams, educating, reading books, spending time on the proper things, touching up on their trading, touching up on their psychology when it makes sense to do all those things. Because if you're doing all of that during the bull market, you are paying an opportunity cost for all of that stuff, right? So that's my ending quote. Thank you guys as always, and I will see you on Friday. Take it easy, everyone.